It's made up of a few key factors, and there's a total of 5, but mostly being your credit balances, your payment history, your number of inquiries on your credit report. Credit balances exceeding 30% of the credit limit will severely affect your credit score. The number of inquiries on your credit affects your credit score, and your payment history, obviously, because that's what they're wanting to do, is see how your past has been as far as paying your consumer debt and obligations.
A good credit score can make or break a home loan. As of June 2010, in order to qualify for an FHA loan, you must have a minimum credit score of 620 to qualify. An FHA loan allows the borrower to put down only 3% of the home's price. On a conventional loan, it's treated a little different. You can get a loan with a 620 score, but you'd be required to put 20% of the home's price down. If you were looking to put down only 5%, you would have to come in with a minimum credit score of 740. But what steps can you take to raise your credit score?
For the people that have too much credit and too high of balances, you can pay your balances down to the 30% of your credit limit or less. You can also pay off the credit card. The big thing you do not want to do is close that credit card, especially if you have a long-standing history of that credit card. You're going to lose all of that payment history, and it's actually going to damage your score. A lot of people are advised to go ahead and pay the card off and close it. Your score will go up. Paying off the card will help your score. Closing it out will lose all of the payment history and actually damage your score. The second thing I would recommend would be going to optoutprescreen.com. This is a website where you can opt out from having creditors do a soft inquiry on your credit report and actually bring you up anywhere from 5 to 10 points. This is a great thing to do if you're going in and you're borderline on your credit score. It'll keep people from checking your credit and also actually give you that little bit of bump that may be needed. I would recommend for somebody that doesn't have enough credit to go out and open up either a secured credit card or a credit card that is for the less seasoned credit holder. And a great website that can help you and assist you in this, in the terms of the credit card, and the best credit card for you is bankrate.com. Going on that website will enable you to see if you're more eligible for a seasoned person's credit card without having it secured, or going with an unsecured card. The biggest thing to make sure is that that credit card does report to the credit bureaus. The biggest mistake that people make is go with a credit company that does not report.
What is a secured credit card? A secure credit card is a card that is backed by funds you've added to the card. For example, in order to have a $500 credit limit, you must put $500 down on that card. Terms and fees of secured cards may vary. Before making a decision, be sure to read over the terms and conditions of that card.
Just a little bit of an increase in a credit score alone can save you thousands of dollars on a 30-year mortgage. Take into account the difference in interest rate. Difference in interest rate of 0.25% on a $100,000 loan can mean about $40 to $50 a month. Now take that over the amount of 30 years, that can save you thousands of dollars, just having a difference of 10 points in your credit score.